What is going on, guys? Today we're going to be going over how to actually execute the perfect trade. Now, before I begin the video, there is absolutely no such thing as a perfect trade. No matter how much stuff is going in your favor, there will never be a perfect trade. There's always going to be something that went wrong on your trade. No matter if you think so, no matter if you don't think so, there is always going to be something wrong. We can get very close to being perfect, but it's not always going to be perfect. So today we're going to be going over exactly how to actually make a trading plan close to perfect. So these are all the stuff that I'm reviewing. The first thing you want to go over is the why, then in play, risk management, and then the execution. So I'm going to go over all that. I laid it out a little nice today. So the why. So basically, this is the why. This is exactly why you're in the trade itself. Why are you going to get into this play, right? It could be price action. It could be news. Why are you going to take the play? Now, for example, let's say we're taking Tesla. Tesla just got upgraded, for example. Let's say the new price target is going to be $1,500, right? And we're at $1,200 right now. And it's also getting close to all-time highs. We are going to be looking at Tesla for that reason. Let's say, for example, Lucid gets... Lucid cars, for example, the supply, this is not there, right? Demand's high, supply's low. And, a lot more people are trying to get their hands on these Lucid cars, but they don't have enough supply to hand them out. Demand's going to be huge. This might be looking for some sort of upside potential. Again, this is the why. Why are we about to get into the trade? You need to establish that. Don't just get in because, you see it going up, so you're going to FOMO in. Why are you taking the trade? Because it's going up? That's not a real why, right? It's going down. Well, you're going to get a short? That's not the real why. Why are you getting into a play? Is it hitting your price target? Is it hitting a level that you're going to take? Is it because of news, right? Why are you going to take the trade? And this is why I highly suggest you not to follow people if you don't understand the why, right? For example, on my Discord, on my server, the reason why, I post alerts, and it's not even alerts, it's my watch list and why I'm taking these plays, and this is why I live trade and stuff like that, so people understand the why, right? I understand that people need the training wheels first in order to actually ride the bike themselves. Same thing with trading, right? I'm helping you get on, the bike, and I'm helping you with the training wheels, and I'm telling you why exactly I'm executing this trade, the why, everything you need to know about this trade, so you can learn from that and make your own trades, right? Of course, you're not going to, when you get started in stocks, of course, you're not going to go and be like, oh yeah, this why and this, that, and this, and just know how to formulate a perfect trading plan. That's just not the case, right? It's going to take some time. And what better way to actually understand how to execute the perfect trade by me going over it with my students, right? So that's exactly why I do that. But if you learn absolutely nothing, and you're just following someone because they're just posting alerts, you're not doing it right. You have no clue what you're trading, right? You're just getting in because they're saying getting. Why don't you understand the why? Why are they taking that play? Why are they doing this, right? It's okay to follow someone if they're teaching you along the way. So this is the why. Now, in play, right? So what makes this stock in play? When are we going to take it? When are we going to really get into this play? We got to understand what is our get in, right? What is our in play, right? So if it gets to here, I'll react this way, right? It's not okay to be biased, right? If you're like Tesla, I want to play it to the upside, no downside. You could be a little bit biased and be like, obviously, with Tesla, with all this buying pressure, this and that, Tesla got upgraded. You might be called biased, but at the same time, it's always okay to, in case it does flip, the stock is in play either way with, how much volume's coming in, how many people's looking at it today. You might also need a downside, trade. But at the same time, if you don't like the downside of Tesla, then don't play it, right? Don't trade it. But if it's in play, right, and you see there's a lot of volume coming in, a lot of people are looking at this, this might go either way to the point where you might need a downside level. Now, I usually don't have downside levels or upside levels depending if I am, playing the opposite, right? So if I'm like Tesla's going up today and I'll have my level here. If it hits my level, then I'll get in. I usually don't do a downside play on Tesla, for example, if there's other stocks out there in play already, right? I have a watch list of 5 every single day. At least one of them are going to hit. And that's the one I'm going to choose, right? Just because it might have, a lot of buying pressure coming in, and I don't see a lot of downside potential if I'm playing it to the upside. Or if I'm playing it to the downside, I might not see a lot of upside potential. So that's why sometimes I would only pick one side. But at the same time, if it's a stock in play, you could potentially play both sides. That's why you got to make sure that it's profitable either way. But for this example, let's say we're playing Tesla and Tesla's only $150 a share. Theoretically, obviously, it's around $1,100 or $1,050. But for this example, Tesla is now $150. We're going to play it above 150. If it gets to here, I'll react like that. I don't care if you're biased on calls or puts. Do not get it at open for no reason, right? Don't just get into the trade for no reason. Make sure there's a reason why you're getting into the trade. Oh, if it's above 150, I'll take it above there, right? Just from the why. This is why it's in play. Now you're getting in on the play, right? Now we need to assess the risk. What is the risk? And you should know this before you get into the trade. You should not be assessing your risk before you get into after you get into the trade. You should know this before, right? You should know your risk before you get into the trade, which will help with your position size, right? I already made a video about that. I'll link that down below of risk management. So before you even continue, you might just want to watch that risk management video so you know exactly what I'm talking about here. But make sure you establish that 2% max loss, right? And that's exactly what I mean by you got to understand your risk before you get into the trade. And I went into great detail about risk on that video that I'm going to link down below. So you'll actually understand that already. And I really don't have to go over that since we already went over a whole video about it. And you'll understand why you need to understand your risk before you get into the trade because of that video. So make sure you guys go check out that video. But to basically sum it up, obviously we're going to need a 2% risk. We're going to need to know, oh, if it gets to this place right here, if it gets to this price level, I'm going to be wrong, right? I'm wrong on this trade. And it's so crucial for you to admit that, right? If it gets to this level, I'm wrong, right? And you have to establish that before you get in, right? Let's say, for example, we're going to get in at 150 on Tesla, and at 130, if it comes down to 130, I'm going to be out because I'm wrong, right? If it gets to that 130 level, you're wrong. You have to understand where you're wrong, and you have to understand your risk before you get into the trade to understand your position sizing and to understand how much money you're going to be losing on this trade and how much profit or how much profitability does this trade actually have. So now risk management, I'm not going to go over too much of risk management just because I did already make a video about it. So that would definitely help you a lot more. Now execution, even if you have all three of those down packed, it's all about execution. Either you hesitate or, you don't get in on time, or, you got in too early, or your emotions carry you to the point where you don't even get out where you're wrong. Let's say, for example, Tesla's at 130. You're like, you know what? This is probably going back up. And now it starts to dip a little bit more and you didn't get out, right? That's all about execution. You have to become a robot when you're trading. If it hits this certain point, I'm out. You have to react to what the stock is telling you. Don't react from your own emotions. React logically, right? You have to react logically. If it hits 130, I'm out. Dude, we already established that. Why are you still in, right? Same thing. This is execution. This is the biggest thing that could either kill you or can make your account way consistent, right? Can make you stronger in the markets. So execution is the biggest thing, all right? Execution, whether it's volume, tape, momentum, market internals, why are you getting in on, let's say, for example, it's at 150, right? Are you going to continue to get in? Are you going to hesitate? What exactly are you going to do at 150? Now, a lot of people, what I see happening is they really don't know how to execute. So when it hits 150, they either get in way too early, get in way too late because they hesitated because they thought that they weren't supposed to get in at a certain price, this and that, right? But sometimes when it hits their stop loss, they just don't get out and they hold it and hold it and hold it. So this is why execution is crucial. You need to make sure you get out on your risk and you need to make sure that you're taking profits effectively. And I did go over that on the 1,000 account challenge video that I made. I said, what would I do if I had $1,000? Basically just going over profit taking as well. I did make another video about that. So basically there's literally a video for each step. I'm just going over how to formulate your plan, right? So execution is crucial to this, right? You need to know how to execute. You need to know how to get in. You need to know how to get out. You need to know that if you're too emotional, make sure you actually start to scale out of your position, or maybe you need to get rid of some of that risk. So this is why you need to take some off. For example, if NVIDIA is taking way too long and it's consolidating, I might take some risk off the table, which means I'm going to start to sell some here, even if I'm only up 5%, just because I don't like how the trade is going. But our stop never hit yet, but I want to alleviate some of that risk just in case, right? A proper plan, just alleviating that risk. So it helps your mentality a little bit more. So it helps you think thoroughly, right? If you think that you're starting getting a little emotional on that trade and you think that you're starting to get a little hesitant on the trade, oh, I'm going to wait for my stop loss, or I'm getting scared, like how long is it going to take and stuff like that. you might want to take off some of that risk and you might want to sell some there, right? It's all about that execution. What are you going to do at this price when it gets to there? What are you going to do at this price when it gets to there? So that's execution. Now to sum it all up, this is essentially what you want to look for every single time, right? The why. Why are you getting into the trade? Oh, there is news, right? All right. So now what makes this trade in play? Oh, if it hits a certain price, I'll be in. Okay, perfect. Risk management. What is my risk before I get in? How much am I risking before I get in? Is it, more than 2% max loss? Is it 1% max loss? Is it, whatever, right? Now execution. So after all that, am I going to get in at this price? Oh, do I see volume in my favor? Do I see the market internals in my favor? Is NQ literally going against us, right? If we're trying to play it to the upside and NQ's tanking because something came out on the news about, let's say the economy is just failing right now, and Powell said the stock market is doomed, right? And you see the entire market internals is dropping and you're trying to play puts, would it be a good idea to execute now, right? That's all about execution. Don't hesitate either. Make sure you get in and out at those prices, as well as looking at the tape. And I am going to make another video about the tape as well and how to read that to help you trade. Because if you're not using the tape, if you're not using a level 2, you're basically trading with a blindfold on. So I'm going to go over all that as well. That will help you stay in the trade, a little bit longer to give you more confirmation on the trade or help you get out quicker, right? That's basically the trade. And that's exactly what you should be journaling every single day, right? So now a little review. So this is where I want you guys to basically review yourself, right? I want you, if you guys trade today, just put it on here, right? Why did you get in? So for example, let's just do, let's say Tesla price upgrade, right? That's the first step. Let's say we're playing Tesla. Tesla price upgrade. Okay. Tesla above 1088, right? I established a resistance at 1088. So if it goes above that, I will be playing calls as I see profit potential, right? I see this going to at least, right, Tesla 9, let's give it like a 995 or a 1095, right? That doesn't mean it has to go 1095. That doesn't mean we're going to get out at 1095. That just means that's where I see the next resistance, right? It can go to 1093 and reverse. It can go to 1100 in reverse. It's all about execution and knowing when, there's a lot more selling pressure than buying pressure. If sellers are starting to step in a little bit more here, if it's starting to reverse, that's another whole video. But there we go with that. Now our risk. Tesla, all right, so let's say we're getting at 1088, and let's say there was a support, right? It's coming up. Our stop is going to be under, if I could type under, let's say there was support at, let's say it made support at 1085, right? So a $3 difference for options is a little different, but let's just say 1085 is our risk, right? So we're going to get out once it goes under 1085. Now execution, obviously we're going to need to see the market internals in our favor. We're going to need to see a lot of volume on Tesla, making sure the tape is looking great, seeing some buyers there. Once we get all that, then we execute. And then we go over the trade. What was our risk, right? We risked $3, or for the contracts, it's going to be a little different. Let's say we risked about, $150 a contract, and then we made about $300, right? So that's a 2R, right? We risked $150. Now, risking does not mean how much you put into each contract. It's what you were able to lose per contract. Let's say the contracts were $200 or $2,000 a piece, and you're going to get out once it goes to $1,850. That means you risked $150. You didn't risk $2,000. You risked $150, and you made $300, which means that you doubled your risk, which means that you made $300 when you only risked $150 per con. That's basically risk management. Now, that's everything you want to review when you're in the trade or after you're in the trade. Making sure that you do everything beforehand and then doing the review after will help you to become a better trader. As you can see, what went wrong, what is your weaknesses, right? I always like for people to lose at first so they learn what their weaknesses is, right? Are you too emotional? Are you too hesitant? Are you, too expensive contracts? Is your risk too high? Is your risk too low? So this is why, I advise people to not worry about losses and actually encourage yourself to lose and learn from it, right? Now, obviously, I don't want people to lose, but I want them to learn from their losses. That's how you learn. You learn from your losses, and that's how you know what you're doing wrong. So that's why at first you would rather lose than win, because you really don't learn as much from winning than you do losing. So that's why that's a big thing, is to learn from your losses, which will help you develop, those strengths. It's how you learn your weak spots. So if you guys enjoyed this video, or if you guys want me to do another video about something else on a different subject, make sure you guys comment that down below. That also helps the YouTube algorithm. Subscribe, leave a like, and make sure you guys comment down below what videos you guys want me to do next if you guys are enjoying this. If not, I'll stop. Just kidding. I'm going to keep going. But other than that, I'll see you guys in the next video.